Take a look at some of the retail stocks rocking a big rebound today. Shares of Bed Bath & Beyond up 6%, Kohl's up 3%, Macy's getting a pop, Gap up 2%, and Nordstrom up 2.5%. Let's get out of Courtney Reagan with more on the bounce and whether or not this is some kind of a trading thing or more fundamental. You're doing channel checks every day, Courtney, I'm sure. What are we seeing around these retailers?
This one's a little bit harder to figure out, Brian. It has been choppy for these guys, so I think it's too early to really call it a Santa Claus rally for retail. But it's fair to point out that many names that have been beaten down found some steadier ground today. So the XRT retail ETF, it finished up the day 2%. That's in line with the broader market, albeit still down 7% for the week, which is more than 2.5 times worse than the S&P over that same time. Retailers that sell higher-end goods globally have been among the hardest hit recently, but today, Capri, Tapestry up 7% and 6% or so respectively. Tapestry, though, still down 7% for the week, so it's got some ground to go. Nordstrom, as you mentioned, Brian, finally gaining today, but down 9% for the week, 33% in a month. Denim players, Contour Brands, and Levi up 5% and 3% respectively, both lower for the week too. Gap also gaining 2%, but still off 9% for the week. It's looking a little more joyful for the online players today. The RealReal gave a pretty good November sales update, and while it didn't actually juice up its own shares, secondhand competitor site Poshmark gained 5%. RealReal, in fact, still about 54% off its 52-week high. Now, there's some strength in some specialty names. Bed Bath & Beyond also surging about 6-7% intraday. Still down 19% for the week, though. Designer brands, that's the parent of DSW, up 6% today, down 15% for the week. Shopping center REITs are higher. As decent dividend payers, these names move higher on the potential for higher rates often. Macerich, JLL, Tanger Outlets up 5%. Simon Property Group up 3%. So we're going to have to watch this trade closely, Brian, and see if today was an anomaly or the beginning of a trend. I don't know. Back over to you.
Well, we're going to find out. Courtney, thank you very much. So, Karen, okay, Tapestry. I mean, at least today it was the Carol King of retail, but long term, it's not done very much.
Yes.
You like that, guys? What's your take overall on retail, Karen?
Well, my biggest retail position is Target, but I do own Capri. I do own some Foot Locker. I think that it's just a rotation into cheaper valuation stocks. If you look at the PE multiples here, some of them are high single digits or mid single digits even. And so if we are going to see higher rates, coming back again to that multiple, just the pressure of gravity of higher rates gets, to me, it makes these more attractive. And they'd sold off on the thought that Black Friday wasn't quite as good, Cyber Monday wasn't quite as good. But I think we're going to see sales that have very high gross margins because this is not a promotional environment, so they're getting full price. So I think there's more to go in the retail trade.
All right, more to go there. Thank you very much, Karen. All right, I want to do a little bit of breaking news right now. Not a huge story, but it is interesting, especially as we're here in New York City, where a lot of people are waiting to return to the office. And this story is up on CNBC.com right now. Google workers in the U.S. will now not return to their office on January 10th. That was the previously announced date, which, of course, had been pushed back from the previously announced date. This, according to an email memo reviewed by CNBC.com's Jenna Elias. You can read the full reporting right now. It's going up on CNBC.com. But Google Google workers will not return to the office as planned as of January 10th. Anybody, Bonawyn, you got a take on this? The Omicron variant. There's more concerns now. It's the winter seasonality. Cases may pop. Any market impact here on this kind of a story?
No, I think it's more of a workforce type of flow through. You know, when we first, I mean, clearly there's the Omicron overhang, but when we juxtapose the culture that is around these tech companies and big tech, it's like an innovative, very accommodating type of culture. And I think they're just essentially saying, listen, what's most important to us is the health of our workers, and we just don't want to have to sacrifice that. Additionally, I think it's really a way to attract talent. And again, I'm not going to call out any names or cast aspersions, but there are definitely some old school companies that insisted that people come back, and we saw outbreaks. And you've now seen, for example, some of the banks and investment banks having to come out and pay people for the additional workload and the stress that it's causing. So for me, it's just more of a strategic way of attracting talent, retaining talent, and separating one from their peers.
All right. So once again, folks, the news there is that Google, according to an email reviewed by CNBC.com's Jen Elias, the story's up on the website now. Workers not returning to the office as of January 10th. We'll see if other companies follow suit.